Before you sign anything on a trawler, here's the number most brokers never put on the listing. About $2,500 a month. Not the purchase price, what it actually costs to own the boat. Insurance, slip fees, financing, maintenance, you can't skip. That's the real bill, and almost nobody budgets for the whole thing at once. We pulled the real numbers, actual insurance quotes, real Marina slip rates from Florida to the Pacific Northwest to the Chesapeake, and the financing terms lenders actually offer on an older boat. Then we added it up to show what a typical liveaboard trawler really costs every month, before you ever leave the dock. Some of it will surprise you, and one part could change which boat you end up buying. If you're retiring onto the water or thinking about it, this is the math you need before you finance a single dollar of it, not after. Start with insurance, because it's the cost that surprises people first and hits hardest. Most first-time buyers price a trawler the way they'd price a car. Purchase cost, maybe a loan payment, done. Boats don't work that way, and insurance is where that assumption breaks first. For a liveaboard trawler in the 34 to 45-foot range, hull insurance typically runs somewhere between 1% and 2% of the boat's insured value per year in most of the country. On a $150,000 trawler, that's roughly $1,500 to $3,000 a year. It sounds manageable until you factor in where you're keeping the boat. In Florida and along the Gulf Coast, where hurricane exposure changes the math for every insurer, that same policy can run 2 to 4% of hull value, sometimes more, once named storm coverage and higher deductibles get added in. One owner of a 44-foot trawler, a real liveaboard, not a hypothetical, disclosed something worth sitting with. Their premium jumped from about $4,000 a year to $6,100 in a single renewal cycle. No claim, no accident, just a harder insurance market, a rougher hurricane season, and a company that decided the boat was a bigger risk than it was 12 months earlier. That's not a one-time story. Marine insurers reprice aggressively when their own loss numbers move, and liveaboards get hit first because a full-time occupant is treated as more exposure, not less. Age of the owner, by contrast, doesn't work the way people assume. Federal fair lending and insurance underwriting rules don't let a company deny you or charge you more purely for being 65, 70, or older. And reputable carriers won't advertise an age cap because none exists as a blanket policy. What insurers actually weigh is experience and risk, which brings us to the second layer that catches retirees especially. If you're a first-time boat owner, particularly stepping onto something as large as a 40-foot trawler later in life, some insurers will want to see a captain's license, a completed boating safety course, or a sea trial with a qualified captain aboard before they'll write a policy at all. It's not a blanket rule. It varies by carrier and by boat. But it's common enough that you should ask about it before you fall in love with a specific hull. Finding out during underwriting, after you've already put down a deposit, is the expensive way to learn it. Here's the part that matters most for your budget. Don't quote insurance once and assume it holds. Get a real quote on the specific boat from more than one carrier before you close. A boat that insures cheaply this year can reprice hard next year. And if you're financing on a fixed retirement income, that swing has to be built into your number from day one, not treated as a surprise later. There's one more line item hiding inside that premium that catches people off guard: the deductible. A standard deductible on a marine policy usually runs 1 to 3% of the boat's insured value, manageable if unwelcome. But if you're anywhere with hurricane exposure, look closely at the named storm deductible, which is often a completely separate, much higher number, commonly 5 to 10% of hull value. On that same $150,000 trawler, a 10% named storm deductible means you're covering the first $15,000 of storm damage yourself, no matter how good the policy looks on paper. Some insurers in hurricane-prone areas will also require you to have a written hurricane plan on file, where the boat goes, how it's secured, before they'll bind coverage at all. None of this shows up in the headline premium number. It only shows up the first time you actually need to use the policy, which is exactly the wrong moment to learn about it. Insurance is the surprise. Slip fees are the number that just never stops arriving. Every month, whether you cruised or stayed tied to the dock, the bill comes due, and where you keep the boat changes that number more than almost anything else you'll decide. In Florida, expect somewhere between $20 and $45 per foot per month for a standard slip. In the premium markets, South Florida, the Keys, anywhere with resort-style docks and deep water, that climbs to $35 to $70 a foot or more. On a 40-foot trawler, that is the difference between roughly $800 a month and well over $2,000. The Pacific Northwest runs meaningfully cheaper, typically $14 to $30 a foot, and the Chesapeake sits similarly, around $12 to $25 a foot outside the premium marinas near Annapolis and D.C. Those numbers are the slip alone. Liveaboard status. Actually living aboard full-time, which is the whole plan for most retirees looking at this lifestyle, usually adds its own separate fee, often another $150 to $500 a month, plus metered electric on top of that. One real liveaboard owner, docked in the Tampa Bay area of Florida on a 44-foot trawler, disclosed their actual numbers: $577 a month base slip rent, a $28 liveaboard fee, and $11 for a dock box, with a handful of smaller municipal charges layered on top, landing at a total they put right around $822 a month, at what they described as an unusually affordable marina with a multi-year waitlist to get in. Electric was not included in that figure at all. It ran separately, anywhere from $50 a month in winter to $280 a month in peak summer air conditioning season. Here's the detail that trips people up. Liveaboard slips aren't just about price, they're about availability. Plenty of marinas cap the number of liveaboard permits they issue, and popular ones run wait lists that stretch for months or years. It's entirely possible to find the right boat and the right price, and then discover there's nowhere nearby that will actually let you live on it. If living aboard full-time is the plan, confirm you can get a liveaboard slip in your target area before you commit to a boat, not after. The other trap is comparing marina towns like they're interchangeable. A slip in a small panhandle marina and a slip in Fort Lauderdale are both technically Florida, and the price gap between them can be double or triple. Don't budget off a national average. Call the actual marinas in the actual area you want to live. Get their current liveaboard rate and their waitlist status, and use that number. It's the only number that will actually show up on your bank statement. There is a way to cut this number substantially, and plenty of experienced liveaboards use it. Anchoring out instead of renting a slip. Living at anchor in a legal, well-protected anchorage can drop your monthly housing on the water cost to a small fraction of a marina slip, sometimes close to nothing beyond a mooring ball fee. But it comes with real trade-offs a retiree should weigh honestly. You'll need a reliable dinghy to get to shore, a working water maker or a disciplined water hauling routine, solid ground tackle, and the physical stamina to manage a dinghy in weather, day after day. It's a legitimate way to lower the real bill, not a shortcut for everyone. And don't forget metered electric at a marina slip, typically billed separately from the slip fee itself, on a larger trawler running air conditioning full-time. That can add another $100 to $300 a month depending on climate and season. And it's easy to forget when you're comparing slip rates side by side. Now the part that surprises almost everyone, including buyers who've financed cars and houses their whole lives. Financing a trawler doesn't work the way you'd expect, and the reason has nothing to do with your credit score or your age. Here's the real rule. Most marine lenders cap financing based on the age of the boat, not the age of the borrower. A lender like Trident Funding, one of the larger marine-specific lenders in the country, will finance boats up to roughly 20 years old, and that pattern holds across most marine lenders, not just one. Cross the 20-year line, and financing gets harder to find at any age, on any income, for anyone. A retired couple with excellent credit and a paid-off house can still get turned down for a loan on a beautiful 1998 trawler, purely because of the calendar. This matters because a lot of the trawler's retirees are drawn to the well-built, well-proven hulls with decades of track record are exactly the boats bumping up against that 20-year ceiling. It's worth knowing before you fall for a specific boat, not after your offer is already in. You may also hear a persistent claim online that lenders impose hard age limits on retirees themselves, shortening loan terms, or denying financing because a borrower is past 65 or 70. That's not accurate, and it's worth being precise about it. Under federal law, specifically the Equal Credit Opportunity Act, a lender cannot deny a loan or shorten its term simply because an applicant is older, as long as that applicant has the legal capacity to contract. What lenders can legally do is evaluate whether your income, pension, Social Security, retirement account distributions realistically supports the loan term you're asking for. A 20-year loan request from someone relying entirely on fixed retirement income will get scrutinized hard, not because of age, but because of income durability. That's a real and reasonable underwriting question, and it's very different from an age cap. The practical move: shop the loan before you shop the boat. Get pre-approved, ask directly about the lender's boat age cutoff, and bring real documentation of your retirement income. A little paperwork up front saves you from falling in love with a boat that turns out to be unfinanceable, or discovering your fixed income only supports a shorter term than you'd hoped, right when you're ready to sign. Down payment expectations are also worth setting realistically. Marine lenders typically want more down on a used trawler than a bank wants down on a house, commonly 10 to 20%, sometimes more on an older hull or a larger loan amount. That's real cash out of savings before financing even starts. And it changes the math on whether financing or paying cash makes more sense for your situation. Paying cash removes the boat age financing ceiling entirely and removes a monthly payment from your real bill. But it also means that money isn't earning anything elsewhere, and it means a bigger chunk of your retirement savings is now tied up in a depreciating asset. Neither choice is automatically right. It's a conversation to have with whoever manages your retirement accounts, using the real numbers from this video, before you decide. Insurance and slip fees are predictable, at least month to month. Maintenance is the category that ambushes people, because it doesn't arrive as one bill. It arrives as 50 small ones, all year long. Start with the water itself. A boat sitting in a slip grows a hull over time, barnacles, algae, the whole ecosystem. And that has to be cleaned regularly, or your fuel efficiency and your running gear both suffer. One real liveaboard owner tracked their own hull cleaning cost, creeping from about $88 a month to $118, then up toward $236 a month, as dive service pricing in their area climbed. That's not a one-time cost. It's a recurring line item that tends to only move in one direction. Then there's the haul out, pulling the boat out of the water, typically once a year or every other year, for bottom paint, zinc replacement, and a real inspection of everything you can't see while it's floating. Depending on boat size and yard rates, a haul out with paint and zincs commonly runs somewhere in the low thousands of dollars, and that's before anything unexpected turns up once the hull's out of the water and someone's actually looking at it closely. Add engine service, generator maintenance, canvas and upholstery wear, electronics that inevitably need attention, and the slow drip of hardware replacement that comes with salt water and constant motion. And you start to see why experienced owners use a rule of thumb instead of trying to nail an exact number. Budget somewhere between 10% and 18% of the boat's purchase price per year for total ownership costs, insurance, slip, and maintenance combined. On an older boat, in a harder climate like Florida, that can run 20 to 25% or more. That range is wide on purpose. A well-maintained, recently refit trawler in a mild climate sits at the low end. A 30-year-old hull in a hurricane zone, needing catch-up work, sits at the high end, sometimes well past it. The way to know where your boat falls isn't to guess. It's to get a full survey before you buy, have the surveyor itemize what needs attention in the next 1 to 3 years, and price that work out with a real yard before you sign anything. A cheap purchase price on a boat that needs $30,000 of deferred maintenance isn't a deal. It's next year's maintenance bill in disguise. Two systems deserve their own line in your budget because they're expensive and they're easy to overlook on a walkthrough. The generator, a Westerbeek, a Northern Lights, an Onan, whichever brand the boat has, runs continuously when you're at anchor and away from shore power. And a rebuild or replacement on an aging unit can run anywhere from a few $1,000s to well over $10,000, depending on what's needed. And if the boat has a water maker, which many liveaboard trawlers do, budget for filter changes and membrane replacement as a recurring cost, not a one-time install. Ask the current owner directly for their actual service records on both systems, not a verbal "it runs fine," but real dated receipts. A boat with documented maintenance on its generator and water maker is worth more to you than an identical boat without that paper trail, even at the same asking price. So let's put the whole thing together, the way you'd actually see it on a bank statement. Using a realistic example. A $150,000 trawler, financed, kept in a moderate cost region, not the cheapest, not South Florida at the top of the market. Insurance at roughly 1.5% to 2% of hull value in a moderate risk area runs about $2,250 to $3,000 a year. Call it $200 to $250 a month. Slip fees for a 40-foot boat at a mid-range rate of $18 to $25 a foot land between $720 and $1,000 a month, before the liveaboard fee and electric, which add another $150 to $300. Financing on a reasonable loan for this size of purchase typically runs somewhere in the $700 to $900 a month range, depending on your down payment and term. And maintenance, averaged out over a year, including haul-out, hull cleaning, and the small recurring stuff, lands around $400 to $600 a month on a boat that isn't hiding major deferred work. Add those together, and you land right around $2,000 to $2,750 a month, with $2,500 a month as a realistic, middle-of-the-road figure for exactly this kind of boat, in exactly this kind of location. That's before fuel. That's before a single weekend of actually cruising the boat. That's just what it costs to own it, tied to a dock, doing nothing. Move the same boat to South Florida, and the insurance and slip numbers both climb. You could be looking at $3,000 to $3,500 a month instead. Move to an older hull, past that 20-year financing line. Pay cash instead of financing, and the number shifts again, lower without a loan payment, but likely higher on insurance and maintenance for an older boat. This is the number that almost never shows up when someone's browsing listings, because a listing shows you the purchase price, not the ownership price. And it's the number that determines whether a boat that looks affordable on a fixed retirement income actually is affordable, once every real cost is on the table at the same time, instead of arriving separately, month after month, as its own small surprise. Run the comparison the other direction too. Pay cash for the same $150,000 trawler in that same moderate cost region, and the financing line disappears entirely. Your real bill drops to somewhere around $1,300 to $1,850 a month, mostly insurance, slip, and maintenance. That's a meaningfully different number, and it's why so many retirees who can afford to buy outright choose to. even when financing is available to them. The trade-off, again, is that the cash used to buy the boat stops working for you anywhere else. There's no universally right answer here. Only a right answer for your specific retirement accounts, your specific income, and your specific comfort with a large, illiquid purchase. What matters is running both scenarios with real numbers before you decide, instead of assuming financing is simply the normal way to do it. Here's how to use everything you just heard in the order that actually protects you. First, build your all-in monthly number before you fall in love with a specific boat. Not the loan payment alone, the full stack, insurance, slip, financing, and a realistic maintenance allowance. If that full number doesn't comfortably fit your fixed retirement income with room to spare, the purchase price almost doesn't matter. The ongoing bill is what will actually strain a budget, month after month, for as long as you own the boat. Second, get real insurance quotes on the specific boat you're considering from more than one carrier before you make an offer, not after. Ask directly whether your age, experience level, or the boat's age will require a captain's course or a sea trial to get covered. Third, if you plan to live aboard, confirm you can actually get a liveaboard slip in your target area and ask about the wait list before you commit to a boat in that region. A great boat with nowhere to legally live on it isn't a solution. Fourth, shop the loan before you shop the boat. Ask any marine lender directly about their cutoff for boat age. Most cap financing somewhere around 20 years, and bring real proof of your retirement income so you know your actual term and rate before you're standing at a closing table. Fifth, get a full survey before you buy anything, and have the surveyor give you a real, itemized list of what needs attention in the next few years. Price that work out with an actual yard. That number belongs in your budget just as much as the purchase price does. And treat the survey as a negotiating tool, not just a pass or fail checkpoint. A well-documented list of needed repairs is leveraged to renegotiate the purchase price before you close, not just information to file away afterward. Sixth, and this is the one people skip because it's uncomfortable, run the cash versus finance comparison with real numbers from your own accounts, not a rule of thumb from a video. The right answer depends entirely on what your money is doing right now, what a financial advisor familiar with your retirement accounts actually recommends, and how much of your net worth you're comfortable putting into one boat. Nobody else can make that call for you, and no lender is going to raise the question for you either. They'll approve what you qualify for, not what's wise for your specific retirement. Do those 6 things in that order, and the $2,000 to $2,750 a month reality we just walked through stops being a surprise and starts being a plan, one you can actually afford to keep, not just afford to start. If this kind of straight, itemized breakdown is useful, subscribe. This channel is doing exactly this for boats, recreational vehicles, and the other big-ticket decisions retirees make, one real number at a time. And if you know someone who is shopping for a trawler right now, send them this before they sign anything. It might be the most useful, least expensive thing you do for them all year, before they ever sign a single page.